Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. It was the last day of the trading week, and it ended mixed as investors are on edge about what the Fed may do next week when it comes to a rate cut. Americans, meanwhile, may be worried about work, and that could be impacting their spending habits. We're taking a deep dive into consumer spending. And a new stock is perking up the Nasdaq. Unique coffee drink maker BlackRock Coffee Bar IPOs today, and we're speaking directly with the CEO. Well, consumer sentiment dropping in September as Americans anticipate job market risks. This comes as consumers also continue to express anxiety about tariffs and remain price conscious. So what are consumers seeking in terms of value, and what are retailers offering? Here to discuss is Placer.ai Head of Analytical Research, RJ Hottovy. RJ, great to see you. So let's start right there, RJ, because you've been thinking about the consumer, I know, a long time, tracking and analyzing the consumer a long time. Let's start with the trends you're seeing in the data. You note here, RJ, consumers, they're still spending, you say, but they are being cautious. They're being opportunistic, you point out. Walk us through what you are seeing in the data. What are the trends?
Yeah, thanks, Josh, and happy Friday. We really got a tale of two economies going on right now. On one end, we've got the high-end consumer that is continuing to spend, the wealth effect. They feel good about where they are, given where we are in the stock market and generally speaking with the housing market as well. So we continue to see those retailers and restaurants that would cater to a more high-end audience doing well. At the same time, low-income consumers are under pressure, and they are the ones who are spending more on need and less on want. We see that with a lot of the categories out there. A lot of the retailers talked about this. We even see this with the restaurant sector, with the limited service, quick service restaurant, and fast casual. August and the start to September has been very weak as some of these consumers have started to trade to other channels. So it's really a bifurcated consumer right now. That lower to middle income consumer, we're seeing a lot of signs of a weakness right now, but continue to spend around events and needs more than anything else.
Let's dig into retail specifically, because it was interesting, RJ. You say a divide has in fact emerged between, you say, value-oriented and discretionary retail. What do you mean by that? And how did you see that play out during the earnings season?
Yeah, what we saw is that certainly those retailers that skew towards more of a value-oriented customer, so that would be your dollar stores, that would be your off-price retail, that would be some of the value-oriented grocers as well, generally speaking, did very well. And so I think that that's where we're seeing it. At the same time, at a lot of the more superstores and mass channel, we did see that discretionary categories were somewhat weak. So I think that we're seeing kind of this bifurcation again in terms of retail trends. Those that do cater to a more, or to value-oriented consumer are doing generally pretty well, and they're capturing share in this market, whereas those who are kind of more middle income, discretionary retail are a little bit weaker. Now, again, the high-end consumer is generally holding up pretty well. One of the categories doing very well right now is specialty grocery and fresh format groceries. So that is another category that's seen benefit from that high-end consumer holding up well, but mixed response for kind of that middle to lower income consumer.
What do you see, RJ, as you look ahead now, back half of the year for the retailers in the all-important holiday shopping season?
Yeah, I think you nailed it with kind of the uncertainty that's starting to bubble up. August was a tougher month, and really July and August, we did see retail visits up, but it was largely driven by promotional periods. July was Prime Day and all the retailers that competed with Amazon in terms of offerings. August was really more of a back-to-school driven holiday. So if we look to the back half of the year, we're really talking about a situation that it's a very promotional driven consumer, one that wants a lot of deals, one that's going to spend around certain events, but probably take a break in between. So I think we're kind of looking at a more cautious situation. Now, again, I think that high-end consumer, as long as we don't see too much volatility in the equity and housing market at this point, should generally hold up pretty well. So I think that that's going to be one of the keys to watch is really how promotional we see retailers get, because I think that is going to be one of the stories is it's going to take deals to drive that lower middle income consumer to stores as we get closer to the holiday period.
We've been talking retailers, RJ, but I want to switch gears to just dig into restaurants as well. I'm interested in the trends you're seeing there, how you see those unfolding. What are the kinds of restaurants generally that consumers are hitting right now?
Yeah, it's a great question. It's one that I think a lot of the quick service restaurant chains are asking where are the lower income consumers going. Most of them have talked about weakness among that lower and middle income consumer cohort. And frankly, we're starting to see trade out of QSR. A lot of consumers may be facing other financial burdens in this category and may not have the budget to go to QSR given the inflation we've seen within this category the last couple of years. So we've seen that group trade out to value grocers and convenience stores and dollar stores to some extent. So I think that's going to be one of those key things to watch. And in response, I think we're starting to see QSR get a lot more promotional. We're starting to see McDonald's launch the extra value meal. We've got Taco Bell doing the Y2K Decades $3 menu at this point too. So a lot more promotional activity, especially now that I think the QSR category has more clarity about inflation. I think we're going to see a very promotional environment, a lot of those bundled meals to drive visits in the back half of the year. At the same time, casual dining's having a nice time. I mean, Chili's was the story of 2024. It really has been the story of 2025 within the restaurant category. Not only did they acquire a lot of customers last year and visitors, they are starting to retain that and seeing visit frequency. And now some of the other players in the space, whether it be Applebee's or somebody else, are starting to replicate the playbook that Chili's has had put in place and starting to see success from that. So I think it's interesting. And again, that ties into this idea that the higher end or upper middle to upper end or upper income consumer generally holding up pretty well. And so I think casual dining has actually had a pretty good year, all things considered.
Final question, RJ. We talked about retailers, we talked restaurants. I want to end here. Your thoughts on those firms, those companies offering entertainment. What are the trends there?
Yeah, it's a good question. And I think looking at entertainment, it's one of those categories. I think you have to take category by category. But I do think that generally speaking, people pulled back on things like travel. I think there are certain categories within entertainment. We've seen a little bit of resurgence in kind of more attractions and events. Maybe people doing less international travel, but maybe reallocating that to maybe a concert at this point. So we've seen a little bit of that. And again, this is kind of more tied to that upper income consumer, less so for the lower middle income consumer. But again, for those events, particularly the ones that cater to a higher end audience, generally speaking, have held up pretty well this year.
RJ, always great to see you and have you on the show. Thank you.
Thanks, Josh.
Stick around. Much less for a trend still to come. Closing mixed with the Nasdaq Composite notching a fresh record closing high. Yahoo Finance's Jared Blickery joining us now with the trading day takeaways. Jared.
Best week in about 5 weeks for several of the majors here, so let's check that out. That was the case for the S&P 500, even though it closed in the red, narrowly missed a record closing high, and the Nasdaq Composite and the Nasdaq 100, by the way. So here's the Nasdaq Composite over the last 5 days, up 2 weeks. And let's check out the S&P 500, a little bit less, about 1.6%. Even the small caps, Russell 2000 was down 1% today, but the Russell 2000 was able to extend its weekly streak from 5 to 6. And now let's dig under the surface of the market, because I do like to do that. You look at the sectors, most of them green for the week, led by tech. That means the AI trade is still on. And in second place, utilities, that's part of the AI trade too. And then XLC, that's part of the mega caps. And then you got the S&P 500, then XLY, that's another mega cap sector. What I'm noticing here is the large issues are kind of carrying the day. You got some red, Amazon and Apple, but for the most part, the large cap names, the mega cap names did very well. Here's Tesla up 13%, Broadcom up 7.5%, Alphabet, Nvidia up 6.5%, etc. And let me do this. Let me sort by performance, and you can see that we actually have more red than green there. So the smaller issues really not carrying the day. So that kind of makes the argument that maybe breadth is suffering a little bit. Nevertheless, we had a decent week for meme stocks, and we'll see another pattern here. The larger meme stocks that have done somewhat well over the last few years, especially Palantir, Hood, Coin, Reddit, etc., Circle even, a newer admission to that, those did pretty well this week. And then here's China as well. I don't consider this a fringy asset class, more of an uncorrelated asset class with respect to the general markets, but China did very well. So there are pockets of strength, but it's not necessarily widespread. You do have to do some hunting here.
Now, what about September negative seasonality? I was warned about this by many very smart people, Jared.
And here I was among, I'm not going to put myself in the smart people group, but so on this September weakness, here's a chart. I just want to remind people, this is, I have two different maps for seasonality, and this is for the S&P 500. One goes back to 1990, that's the white line. The green line goes back to 1928, but it only has those years where we're matching the same day of the week. So I think it ends up to be 8, 10, something in that range. Nevertheless, you will notice that things tend to do well in the first half of the month, and then they drop off. And the 1928, which is the one I'm tracing out here in green, that is my preferred one. It's the one that's done better this year. So my concern is we get the Fed meeting next week, then the rubber meets the road in some kind of way, and people realize maybe the Fed's behind the 8 ball, maybe the Fed is behind the curve, they should have been cutting before. That's what I'm thinking about. So that's what could cause the market to turn. Is that the case right now? No, we only price pays. So we got to pay attention to the fact that we are actually sitting in a pretty decent shape for the market at or close to record highs. But nevertheless, the September seasonality map does point out the possibility that we could have some weakness in the back half.
And next week, of course, that is the big event on the Jared radar.
Yeah,
Fed.
Let's game out the Fed right now. So first I'm going to pull up a chart of short-term interest rates, and for that I use the 13-week T-bill rate. That has been crashing over the last month, maybe even 2 months here, and we'll check that out in a second. And yeah, let's go to a 2-month chart, and you can see it was all the way above like 4.25%, somewhere in there. That's the lower end of the Fed's current target for its short-term rate. It's supposed to be between 4.25 and 4.5, but this has been pricing in those Fed rate cuts. And so what I said before, is the Fed behind the 8 ball? That's my concern here. And there's also going to be some talk about quantitative tightening, whether or not that rolls off. I think that's secondary in nature. The biggest concern for me is that we are heading into October, November, kind of primetime crash season. That's when you see the VIX tend to spike. And so you put everything together, markets are a bit fragile right now, and things are kind of dictated by what the labor market is doing.
Very quickly, as we end here, should we do a quick check of Bitcoin?
All right, let's do that. Let's do that. You know, it wasn't a bad week for crypto either. Let's see if I can, let me just do this. I'm going to go to our heat map, and I will pull up crypto here. And we can see this is what's happened over the last 5 days. Bitcoin up 3.7, Ether up 8.2%.
There it is. Thank you, Jared. Appreciate it, buddy. Stick around. Much more Ask for a Trend still to come. Black Rock Coffee Bar making its public debut on the Nasdaq. The stock surging on its IPO day, and Yahoo Finance's Brooke DiPalma had the chance to speak with the CEO on what's ahead for the coffee chain.
It's a big week for IPOs, and the coffee chain Black Rock Coffee Bar made its public debut on the Nasdaq. The ticker symbol BRCB. Now the shares opened around $26.50, and I'm joined now by the CEO, Mark Davis. Thanks so much for sitting down with me.
Thank you for having me very much.
So break down for me. You seem like you're an in-between a drive-thru only model like Dutch Bros and the third place like a Starbucks. Break down, how exactly are you different from the competition?
So I think when you look at the model, we have all the components of a Dutch Brothers. If you think about the drive-thru only, we have the order ahead with the app, and then we have third party that can order. But then secondarily, we have this lobby. And I think when you think about the magic behind our brand, it's certainly the baristas and the way that they engage, just terrific connection, really important.
Right now you have only 158 locations from the northern Pacific Northwest rather, all the way to Texas, but you have aspirations to have about 1,000 by 2035. What's the roadmap to get there, and what are the challenges perhaps in the way of getting there?
So we're in 7 states currently, a lot of runway to grow within those states. We have planned at another state here in a couple of years, and you'll see one another couple of years after that. And I would say that the challenges are specifically making sure we have the right teams to engage the connection, the experience, all the above. We're about 5 quarters ahead with regards to our people pipeline, and really proud of the group that's gotten us here.
In terms of labor and building costs, how exactly has that cost the company? What exactly are you up against right now in this environment where tariffs are top of mind?
So I would say that with tariffs initially, Jeff and Dan, who were the original founders, they came up with a model where we buy beans from 8 different countries. And so when you think about that, we have the ability to regulate where we're going to buy beans to keep the prices even, keep the value proposition right. And as such, we've been able to be really consistent and keep that price for our guests. You add the experience to it, and it really makes it a fantastic place to visit.
Yeah, in your S1 filing, you say that you have imports from Brazil, Colombia, Ethiopia, Mexico. When you think about this sourcing, we did see the CPI print coffee prices jump about 20%. How do you then offset the cost of these higher cost tariffs, essentially from Brazil especially? Will you have to increase costs of a cup of coffee?
So we have not increased costs. When you think about Brazil, we have moved away from the Brazil beans for now, moved more to Mexico, and when that coffee price is at a medium level, essentially we were able to keep the prices consistent. The value proposition is so important to us. That's one of the strategies we really dive deep into.
And I thought it was so interesting because you also mentioned beyond just coffee, refrigerator units and espresso machines were also going to be impacted by the cost of tariffs. So when you think about essentially building out more locations, how does that then work? I mean, you obviously need to have those in your next location.
And so the espresso machines are pretty immaterial on cost. One of the things that we believe is having the baristas be able to pull the shots and make the drinks is so important. And so as we embed in within our model, that is part of it. And again, to drive that connection, that experience, really important to the brand.
And now on the flip side, what I've been covering so much, Yahoo Finance, is this impact of tariffs on the everyday consumer. Now you do have a bit more of an affluent consumer. I believe around 60% of your customers have an income of over 100,000. So describe to me, is your customer resilient right now? Or are they able to offset the impact of these tariffs?
So we on average on a medium price are going to be certainly in line with the other coffee and beverage companies. When you think about how we are taking care of the guests, we're certainly doubling down on the experience. And I think with being able to keep those beans cost neutral, we feel we've got a great value proposition and have really reinforced that and driven that forward.
We did get a read from the University of Michigan this morning that consumer sentiment is down. Young people are very bearish on how they feel about the overall economy right now. How exactly do you convince someone to spend in this environment? And are you seeing any customers maybe spend a little less than usual?
Yeah, as our values and as the way we look at our brand, we go with connection, super important. I want you to feel the experience. Caffeine, we want to have a really high quality bean and we push on that hard, and then community. And so as we bring people in, I think we value it as this is their hard-earned dollars. I want to make sure that they feel it was valuable and worth it. And so as we teach our baristas, that experience and connection is really important.
Now, like Dutch Bros, you do have an energy drink as well, a fuel.
Yes, ma'am.
This fuel is very vibrant, very colorful, and another top of mind is the artificial coloring right now. It's top of mind for so many consumers. What's your plan? Does these drinks contain artificial coloring, and do you have plans to perhaps change that in the near future?
So our drinks do not have artificial coloring in it. And again, Daniel from the beginning pushed real hard on making sure that was the case. We try to make sure that the products are of the highest quality, and again, the experience is just so consistent, predictable, and causes you to feel that the value was worth it.
Yeah, I need to get the ingredients on those because they're such vibrant colors. Now, you do come from a background. You were Vice President of Operations at Panera Bread. You were also COO of the parent company of Einstein Bagels. How is this moment different for you than your past experiences?
I would say there's significant responsibility in making sure that the team is taken care of, that the guests are taken care of. And so, even today, when I look at everything that's going on, I'm most especially proud of how the team feels about it. And I think it gives them all both professional and personal career goals and aspirations. And as I move forward and we look at our company, everything about that is built around the fact that we want to make sure that we're doing right by not only our guests, but our team.
Yeah, certainly. Connection, caffeine, and community. I saw that in the S1 as well. Mark Davis, CEO of Black Rock Coffee Bar. Thanks so much for joining us.
Thank you for having me today.
As for a trend, be sure to come back Monday at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.